All right, guys, how you guys doing? This is JJ Money. Firstly, I'd like to say thank you to Mr. Casino for such a great community we have, helping each other to be better in all of these. So I have a scalping strategy I'd like to share. Firstly, this is same way with Mr. Casino, same stuff, just some one or two mixture with some information I got from several people, and also disclaimer, this is not a holy grail. Okay, yeah, we're gonna lose some trades and we'll win some, and our win will be more though. So we just have to do more back testing to be sure this is working. Okay, I'm just gonna present it to you and you just have to check it out for yourself. So I've been using this, it has been working a bit, it has been working well. So I have some trading plan I wrote. Let's see. Okay, quickly, I don't want to make this video like long. Okay, you can take a screenshot of this trading plan. So my risk management, if I'm using the pop firm, I risk 0.5% to 0.2%, or I should have said 0.2% to 0.5%. Either way, you understand what I'm trying to say. So my daily risk is 2%. So for pop firm, I don't risk more than 2%. Why? For my daily profit, I have no profit, so it's unlimited. And yeah, our daily profit have no limit. Firstly, I'd like to say also I have to apologize if you're hearing some background. It's due to the Morocco win, so probably some people are celebrating over there. So I'm so sorry if you hear some background noise. So moving forward, also if I use 0.5%, so if I'm using 0.5%, once I lose four times in a row, I stop for the day. Okay, I don't trade more than that. For this strategy, once I lose four times in a row, using 0.5, I stop. Why? If I'm using 0.2, once I lose eight times in a row, which hasn't happened yet, then I stop, but it hasn't happened. Okay, I would advise, if you're learning, you can start with this risk reward. So most of the time I trade, it's not most, I mostly, or I will say I trade only NAS 100 for now. Why? I know most of you trade gold. My maximum stop loss in pip is 10 pips, but your stop loss can be 1 pip, 5 pips, 3 pips, 6, whatever, but no more than 10 pips. You can also implement that in gold or whatever. Why my break even? So once I'm in 1 to 3, I break even. I move my stop loss to break even. Why for partials? When do I take partials? Once my trade is in 105 from my entry to 105 from my stop loss, I take 50% off. Then I let the rest get to my full TP. What is my TP? My TP is always the next area of liquidity. So we're trading liquidity sweep. Okay, yeah, it doesn't have to do with manipulation zones and all of that. You can add that for your extra confidence. But I'm just going to show you how to trade just strictly manipulation sweep. Okay, that's a manipulation sweep, liquidity sweep rather. Well, liquidity is also manipulation. Trading time, I trade London to New York, so I don't wait till New York close. What I mean is that once I make my profit, I'm okay for the day. I don't have to wait till it close, market close before I leave. Personal trading, if you are using a personal account, you can use 1 to 5 risk reward. Did I say 1 to 5? You can use 1% to 5% of your capital since you're using your personal account. So once you are satisfied with your daily profit, you can close for the day. Okay, there's no minimum targets. Okay, you could target 2% or more. All right, so that will be on you. Just have a good realistic plan. So once again, this is the trading plan for the strategy. You can copy it and save it and pause it. I know I should slow down. All right, I don't, like I said, I don't want this video to be too long. Straight to the chat. um Before we go straight to the 15-minute time frame, because that's what we'll be looking, we have to do a little of market structure. Mr. Casino taught us about market structure, and he explained to us about support and resistance. The retail way of support and resistance is kind of working. Okay, but I'm going to show you how we're going to use this to determine our institutional zones. I already did some markup, which was here, so because of time I will just go to this part, but let me just show you how I would have marked it up and refine it to get to my institutional zone. First thing first, I look for I zoom out on the daily time frame, look at all the points and start marking them out. But I only mark the current price action. I don't like going straight to the I start from the right to the left, so I mark only from this point to this point, and I'm going to show you why this is very important. You're going to see that. So I just draw all of these zones like this, and just do something basic. Most of us know how to draw support and resistance. So yeah, something like that. So now, how do we refine it? So refining our market structure. What we're gonna do right now, we're going to look for OBs now, OBs or FEO, whatever. So in this whole zone, where is it OB? I'll be using this particular one, sell to buy. So the bank deceived them there. So we'll draw this. All right. So now, once we draw our OB in our support and resistance, how do we know that it's a institutional zone? When the first retest of it, if price retest and move away from it the first time, it confirms it as the legitimate institutional zone. But once price broke through it for the first time, we'll delete it. Okay, so for this will be our permanent. We don't change it. So this is just once you're done with this, you don't do anything anymore. So for this, you can see the first, I would say the first retest was this, because this would have been where it was. So the first retest was this. Remember, this is a daily, so I'll say this, and also an institutional zone. So if it broke through it, would have removed this. So this would have been your order block. Yeah, first retest, we did some major retest, but it broke through it. Okay, so this zone would be deleted. Okay, that's how you would have drawn it. So because of time, I'll not go straight, I'll not go much. Once you're done with that, you now start with marking out liquidity. But let me just go to the one I have drawn because of time. Like I said, I don't want this to be more than 30 minutes maximum. So I'm even looking at 20 minutes. Okay, so this I've drawn this, so mind me, bear with me with this. So I want to quickly show you what Mr. Casino was trying to explain to us: break and retest, break and retest, break and retest. So let's just use the current price action. You can see I've actually refined all of this. So I've refined this. You can see reacted, so it will react at the future, reacted, reacted, and all of that. So look at this. Let me just use the current price action side. So you can see price was coming towards the air. Mr. Casino said something. Once price breakthrough zones, it will automatically, we know it's going to go back to that zone, so for retest. So price came here, broke this zone, retest, retest, broke this zone down to this point, and retested it, broke this zone, retest, retest. So you can see this our permanent institutional zone. We know when price come to this point in the daily time frame, we're expecting a reversal. You can see as price was just retest, retest, came here, retest to break up, broke up, retest, play around there, broke down, retest. You can see. So once we know that when market is in these zones, we know market is going to reverse. Remember, you can also use your FU, daily FU, for market direction. Okay, but this is not for that. You can add that to your confluence, but this is how this is done. So the next thing you do after you've gotten your permanent institutional zone, if you have any questions, just ask me. You go straight to marking out your daily time frame doji. Now doji is very important in this um strategy. You must understand doji. You must go and study what doji is, because sometimes you can mark out some candles thinking it's a doji, and it may not be, but you just don't have to be right all the time. Okay, but you just have to understand the doji candle, so when you see it, you know this is doji. So you can add some indicators to help you guide you while you're learning, because I also had some issues with that. But doji is very powerful because it truly is a reversal pattern. But we, as an institutional traders, we know that yes, it's an reversal pattern for the retailers, but bankers are going to take their stop loss. So you can see this is a doji, and stop loss are all billions of dollars of stop loss a year, and you can see this an FU, price took it and disappear, and this was an doji, price took it to disappear, and a lot of doji, this was a doji, price took it to disappear. This is a doji, this is a doji. So now I'm going to show you how we trade this doji with this scalping strategy. So first thing, we mark out our daily We don't have to go back in time to draw a lot of. Just look at it here. Look for your doji that has not been taken. So this may and now doji for me, doji candles are candles that have equal. The wicks, both the top and the bottom, are slightly equal. Okay, so if they are like for this now may not be a doji because the the wick below is not a doji, so this will be a doji for me. So I will show you why. I'll show you how I also invalid some doji. And also remember, you also look for double top, double bottom. So you mark out the doji areas. This will not be a doji, but I just draw it just for drawing sake, because I know a long wick normally has liquidity over there. So, but we're just sticking to doji and double top and double bottom. So let me just delete that so it doesn't convince or confuse too much. So we have two liquidity below, we have two liquidity above. So you can say calculating liquidity, we would say three of these market is gonna go. Um, we don't know where market is gonna go, but market is gonna go down. But before then, market has to pick some liquidity above before it move down because we're in internal zones for retracement. So you can see price broke through retest here, we test now to come back here. So once you're done with that, what do? You go to the 15 minutes. So I did a diagram to explain how the strategy work. Okay, so let me just quickly show you how I did the diagram on that. Most of my NAS charts are always marked up. All right, so now this is how the strategy work. Okay, so on the 15 minute, once you're in the 15 minute, you mark out all doji liquidity or double top, double bottom. So this is a doji. Remember, once you see a doji, we're expecting price to reverse. Yes, so we expect stop loss are above. Yeah, so what are we waiting for? We're waiting for, definitely we're waiting for liquidity sweep. Now this is in the important rule. This weak rejection must close, must not be like this. So remember, normally sometimes once you're in a trade in a live market, if you see something like this and you see like this and market is going like this, you might have gone to your lower time frame to look for entry, but no, you have to wait for this candle that swept the liquidity to close this way. It must close with a weak rejection. If it closes with a body rejection, that makes this liquidity area invalid. We're not going to look for sell at all. We're only going to look for sell once this is close this way. So once it closes this way, we move to our 1 minute to look for FU, HCS, or any of the way you look for your entry. But I'm just going to be sticking to FU trade. But bear with me, if you use FU much, you get more losses. But if you include HCS, you reduce your loss and more win rates, but you might also miss some good trades. Okay, that just you just have to weigh all of this and backtest to be sure which one preferable, or if you're just going to use FU retest for extra confirmation, whatever. So I'm just giving you a strategy to work on, a template to work on for yourself and for backtesting. So once this closes, it has to close this way. We move straight to our 1 minute. Once this candle close, so the third candle will start from here. For example, the third candle will just start from here. So you already know. So the third candle starts, and the third candle, that's when we go to our 1 minute time frame. The 1 minute time frame, we have to look for FU also. We must look for FU. And on 1 minute time frame, we must wait for this candle to close. We can't just take trade once we saw a trade like this and the 1 minute is still and we take no. It can decide to still close this way. So on the 1 minute, we wait for it to close. If it's an HC, if it's an attempted FU, we add extra 2 pip up on the. If it's an attempted FU like this, remember attempted FU must body closure must close the previous candle like this. So if it's like this, it's an attempted FU, also acts as liquidity. So you just add extra. And where's our target? Our target is the next liquidity area. So this is the strategy in a nutshell. Okay, nothing too rigid, nothing too serious. You can mix up some. You can add some confluence also to make it more legit. Okay, but adding this other confluence of waiting for the candles to close. The reason why we're using the 15 minute because we can easily wait for 15-minute candle to close, but waiting for 1 hour to close may take a while. Market would have moved far, so 15 minutes will give us the edge to enter earlier, or 4 hours, so that can take a lot of while to wait for it to close. So that's why we're using the 15 minutes, or you can use 30 minutes, but don't use 5 minutes, use 15 minutes or 30 minutes. So once we're done with that, we'll just go straight to um, the 15 minutes. So 1 hour, one daily liquidity has been marked straight up to 15 minutes to mark up liquidity. Remember, we're marking doji liquidity. All right, so let me quickly look. Because of my trading view is not paid, I think our card is not working right now. So that is that. I'm just going to be using this. Most of you know this software, so it splits my screen for me. So now we're going to mark up all the 15-minute doji, double top, double bottom that we see on our chart. So these are doji. Remember, doji is a reversal. Market was coming downward. We saw a doji. Definitely, market was going to reverse. So this was a double top, this top, but see what happened. But market closure. So let me show you what I'm trying to say. This was a double top and market closure, so we're not going to take any trade there. So this was a doji. Market was coming downwards, boom. Market was coming downwards, also boom. So this was going up, okay. And when you see this, you expect a reversal, okay. But you can see market still went up. So at the top here, this was a doji. Remember I said the wicks have to be slightly equal, and it has to be like in a pivot point, okay. For me, I prefer marking up liquidity at those areas. So these are all liquidity marked. Now look at this particular one I marked. Market came to this point to form double bottom. Okay, so there was some trade I already done. So I'm just going to show you one or two or three examples. Okay, so like I said, this is no holy grail. So you can see this candle. What happened? This candle did not close. It just like formed a double bottom. So we'll move on to the next candle. Now see what happened. This candle closed, close body closure. So this liquidity is invalid. I close it, I delete it. Now what about this other doji we had? So this particular candle had a sweep, a liquidity sweep, with taking two dojis or multiple liquidities here. So it took this one, and so what are we going to look at? So once we see this, we are expecting a buy, right? But before then, I wanted to show you. I think there was some trade setup that I think I saw here. I don't know why I took this trade. Let's say this was a doji. A doji, remember a doji, it's a sign of reversal. So market was coming downward, so we're expecting price to go up, but um, I don't know why this was there. So this was wrong. So this will be a doji, but market closure. But let's focus on this particular candle. So once this candle closes, this is, remember I trade New York to London, targets my percent. On the 16th GMT o'clock, I go to my 1 minute once this close, because two liquidity has been swept. So what would I be looking for? I'll be looking for FU. So 16 o'clock, and so wait for it to close. So it starts, the next candle starts at 16:15. So 16:15, this is 1 minute, this is 15 minutes. So 16:15, 16:15 end year. So 16:15 end year. So when what will happen? I'll start looking for FU trade. Okay, this will not be a class for HCS. Don't worry, I'll be making subsequent videos on how we can use HCS and all of that, but this is just for the scalping. Okay, so this no FU here, no FU here, and now we have an attempted FU. This is a doji. Remember, price is coming down. A doji is for reversal. This attempted FU also is an reversal. So once it closes, it swept it with a weak rejection. So these are those lines that we're seeing. So this 15 minutes also form a this stuff. So what happened? We saw a let's see what happened here. All right, great. So you can see this is not a perfect strategy. No strategy is perfect, but you just have to backtest to get the and winning edge. Your confidence, more confidence makes you more um, 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 winning. Reduce losses to get you more win. So remember, what will happen here is this. This was a this is where we enter. And remember our rule, our trading plan is once is 1 to 3, we break even. So this would have been a break even trade. And once is at 105, we take partial. So was this no? It was not at 105. So this would be a break even trade. So no loss, no win. So what happened? We had that. Let's see what happened next. So the next candle swept liquidity also. It came back to swept this liquidity, also took this liquidity. So once this closed, we look for buy also. So when was this? 16:30. So I'm gonna be stopping this video soon, but I just hope you understand what I'm trying to explain. So let's see. You can see market try to play around and went back up to take us out. So what are we looking at? Market just went up crazy. So what happened here? Market form, remember, doji is a sign of reversal, right? So this was a reversal. So this is the doji. What time was this? This was the one that swept it with weak rejection. 16 o'clock, 16 o'clock. I think this was the 16 o'clock, 16 o'clock, 16 o'clock, 16 o'clock. All right, so 16 o'clock, and yeah, so from 16:15 we start looking for trade. So we start looking for FU to the downside. So right now you're not going to be looking for FU to the upside, just FU to the downside. All right. So we saw one market was coming up here, but we know this doji is a sign of reversal to the downside. So what happened? A strong trade happened here. So this was it. Now this would be what was our stop loss? If it's more than 10 pip, I will not take this trade. Okay, this is 8 pip. So once the candle closes, this is where we enter. Okay, because if we had been thinking some of them was an FU, would have not taken a trade. Maybe I would have taken some trade here because let's see. This was to me, I would not somehow is an FU, and what we can do in this case, if it's more than 10 pips, so if it's more than 10 pip, um, so this is what we'll do. Okay, this is 11. So what are we going to do? We're going to divide it into two. So from the body to the closure, so we're going to look from here to here. So from here to here, and we look for 15 15 minutes, and then price is going to take us in from somewhere around there. And but let's just assume we missed that trade, and we took this particular trade. So now where will be our take profits? Remember, this liquidity have all been taken, so sorry, it's kind of messy. And would look target the next area of liquidity. Let's say towards this was taken. We can say this next area, or this. So these are all doji. If you zoom in, you can see. Remember, I said dojis have kind of have somehow equal, but this is the doji to the downside. Okay, so this was coming down, but it went up. So this would have been our prime liquidity targets. All right, so let's see. Let's see what happened to this trade. So did this trade take us in? Yep, we got in. What is the risk reward? Um, so remember at 1 to 3 break even from this point, yeah. Then at 105 partials are taken, and yeah. So let's see, where was the target of the liquidity. So this place was this one, so that's why I know. You can see 1187, 118. Okay, this is it. Sorry, 1187. This is it. So this would be our final target. So this is 106, 105, 105, 105. Yeah. So this would have taken us in, and you can see, you can also still target this other liquidity. You can also decide to take out some if you know that there's more liquidity and the market was in an internal zone that was going to go down. Now this is where you take in to make it swing. If you know it's in institutional zones for reaction, for example, you know when in this from this point you saw the trade from this point, you know was going to come back to take this liquidity. It was going to come back to take this liquidity. I took this trade. I was going to come back to take this liquidity. So you can see you would have taken the trade from somewhere around there towards to this liquidity. That is how you take a swing if you know it's just touched the institutional zone. So I hope this video is not getting too long. I don't want it to get too long. All right. So this trade went all the way to this point. All right. So you can do some scaling, and this was up to 1 to 12, and I think this would have been my final target. This would have been my target actually. I would have targets at this point, or this and this. So um this would have been my targets one. So what happened on the 15 minutes? So let's see. Just let me just see what happened. All right. So it took it. So I'm going to, because I want this chart to be clean, I'm just going to delete all of those liquidity that was taken so that we will just see all of this. We don't have to stress our eyes anymore, and we'll start drawing out new doji. So this liquidity are all taken, and so what caused this reversal? So just some fill up. All right, so on the 15 minutes, what happened? We saw another doji. Remember, when you're trading, you don't know what is happening. You've not seen the future. Okay, so let's assume this was a doji you saw, but remember, you're in a trade, so you're not going to be taking any trade until you got in. You got out around somewhere around there. You got out somewhere around there. So you're not going to take any of this liquidity print up. So from this point, that's when you start looking for next trade. And let's assume this was a doji, and yeah, this was a doji. So your next uh, your next reaction will be, yeah, now we'll start looking for doji double top thereabouts. At this point, this was an FE to the downside. So because when it's downside, so this was just a continuation. So if you want to scale in and you know it was going down, you can just look for 15-minute grab, 1 minute FU, or also again. So I hope you've been able to understand that. Let's see target looking for. You don't have to draw a lot of liquidity, okay? Just be precise. All right, so I can say this is a um, 15 minutes. So let's see, nothing happened. Let's see, double top. All right, so we have some funny doji here. All right, so doji was taken here. So I won't take this as doji because this has already taken the liquidity. This is an attempted FU. So this is a doji. Remember, reversal is a doji, and equal high, equal low, like the candles at the top and the bottom are kind of equal. So what happened at this point? I'm not going to be looking at all this noise. I'm just focused on this. And yeah, we have a sweep at this point, so we are going to be looking for sweep at 1187. So from 118 to, so we were looking for a sweep here. All right, so we'll be looking for FU around this area. All right, so that's just what we'll be looking at. And before you know, you just see yourself catching. Yes, you're going to lose, but remember, the win ratio is going to cover your losses. You'll be surprised how you're just going to catch some good risk reward, which I've done. I've done 1 to 32. And it was amazing. Usually I target 1 to 5, but I decided to play around with this, and I'm going to show you guys some trades I took. So 13, 13, 15. Yeah, where's the 13, 15? Yeah, 13, 15 was this particular what's it called? What this particular trade. So see what happened. Remember, once price closes above here, we stop looking, and a body closure, we stop looking for sell. So what would have happened is this. So to be realistic, yeah, I was gonna take a sell here. I was gonna take a sell here. Okay, I was gonna take a sell here. Target the next area liquidity. So let's just leave that. It hit our stop loss, yeah, with this candle. So now we're still looking for the next candle didn't close above, so we're still looking for FU, right? So FU, remember the candle has to close. So FU, FU, FU. We're not doing ACS for now. Yeah, yeah, yeah. So who would have taken realistically, we'll be taking trades, and yeah. So let's say I took this trade to peep. Man, this would have taking me out, okay? But see what happened. Remember, we had one break even to a win of 1 to 12, and let's see what happened with this trade. So this also form an FU to the downside, which is a reaction. So I'm gonna take this trade from here now. 4 pips, so I just make it 5 because the FU there's no need to add much pips, so it's kind of strong for me. So where is our next area of liquidity? Our next area of liquidity is this point. So I'm going to draw it down to this point. That will be our final target, okay? All right, so I'm going to drag it. All right, so I'm going to drag this to this point. So what happened? Let's see what happened. Sorry, I think I dragged the wrong one. Okay, this was the one. Yeah, even that first one, that would have been the target. Okay, so let's see what happened. Okay, so you can scale in. You can scale in if you want to. If you want to, but this is not the scaling period. So what happened was this. So what was the? Remember you had 2 losses. This is 1 to 17. Okay. Yeah, 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 yeah. Okay, remember we're in break even. Partials has been taken at 105, 105 around there. Partials has been taken. So the remaining 50% is going to is on break even. So risk free, you've gotten some money out. Yeah, it never took a trade out, and yeah, we got tapped in. So we can do this all day and just gonna waste more time, but this is how we do this. This is how we trade this. Okay. I hope you understand what I just did. So 1 to 17, this 1 to 18, 1 to 12 in a day, 2 losses, one break even. So imagine you're risking with a 10,000, or let's just use $10,000 account. You're risking um, zero point 0.5, or let's zero point 0.5, and 105. 0.5 is about $50, times 5. That's about 250. You divide it by 2. So you remember you're taking 50%, which is 1 to 25. So let's now calculate the 25 half times the remaining. Remember, is 1 to 18. This is 1 to 18. Is this 1 to 18? Yeah, 1 to 18. Remember, we're taking 5 out of 118, so we have 13. So times 13, 13 is 300. Not bad. And plus your initial 125, that is about 3 to 4% trade. But usually I sometimes you can decide to. And remember, you had another win, which was 1 to 12. And if you have a strong heart, you can hold on, not take partials, and hold on to take profit. So you can develop it and do whatever you want to do, how you want to take your profit. You want to be taking partials, but I advise you take partials at the earlier stage, so that you build up your capital, and as you build up, you can decide to hold some trade for partial. So imagine you also use the margin trader. This is going to be a more stacking. Yeah, there's going to be a reversal, probably, maybe take you out, and you know it was still going to go back in. You look for more entry, and you get in. So don't count your losses. Just one good trade. That's for margin trader. This is not for margin trader. But this is a strategy. I hope I've been able to explain, and yeah, share with you. And thank you so much. If you have a question, just let me know. And I need to go watch the World Cup right now. Take care, guys, and see you later. 36 minutes. Thank God.